All right, Matt, the mortgage guy here, recording a quick video. Are mortgage rates expected to rise over the next year? I'm going to talk about what the predictions are, what my predictions are, what things have been affecting mortgage rates lately, what mortgage rates have actually done lately. Because I'll hear all the time, I hear rates are up when rates have been trending down for 2 weeks, or rates have been going up for 2 weeks, and people say, I hear rates are down or rates down. The news takes a little while to get to the public. And sometimes, a big media outlet or something might be a little late to the party. So I'll shed some light on exactly what's been going on with mortgage rates. Things like today's jobs report on May 7th, 2021, how that affected mortgage rates and will affect it going forward, how the economy opening and the speed of it opening and the different data that comes out on unemployment and job growth and whatnot is going to affect rates going forward. And we'll dig in a little bit on other folks' predictions, like National Association of Realtors and Fannie Mae and Freddie Mac and all them. And then I'll give you my predictions, because I just have this sinking feeling that the low interest rates, and I've never said this in years and years of working with clients, I've never been the person that says, act now while rates are low. But I really feel like this latest dip in mortgage rates is kind of a head fake. I feel like higher rates are coming. And I'll show you a chart just to give you a little bit of color to everything I'm talking about here. This chart below is mortgage-backed securities. And you know me, I like to keep it simple. I'm not going to talk about the candlestick formation and star patterns and all kinds of stuff that you might hear from stock experts and bond chart experts. I'll just tell you this. As this chart goes down, these are mortgage-backed securities, rates go up. And then when it comes up and you see green, rates are getting better. So for some context, this is mid-February back here. So this is about 3 months on the chart. Up here, we'll just say this is about a 2.5% 30-year fixed. And as we know, or anybody who's followed my channel, middle of February, towards the end of February, it was an absolute bloodbath. Lots and lots of red. Where the 2.5% 30-year fixed for somebody who's very well qualified in not too long of a time, from February 12th, let's call it, to March 12th. I'll guess, this isn't exact, but this might be 3.1, over 0.5% on the interest rate. And here, end of March and in here, some lenders were pricing 30-year fixed up to 3.375. I know some lenders even were at 3.5% on a 30-year fixed. Since then, they've recovered and come back, and now we're up here where I'm seeing stuff at 2.75. Again, depends on lender, not an offer to lend, NMLS number 1088993. Just some guy on YouTube talking, happened to be a mortgage broker. These are rough numbers based on excellent credit, not based on paying any points. I'm not trying to, sell anybody anything, but roughly, right? This is 2.5%. This might be 2.75. And down here, we got to 3.5 at the top. So anyway, that's kind of the trend, right? And this last 6-week period, it's looked good. I think a lot of lenders I work with were priced at 3.1, 3.2, and now are 2.7, right? So they've got 0.5% better in rate. I personally think it's not long lasting, and I'll tell you why. Things like today's jobs report, where it comes back disappointing and unemployment is still at 6.1%. People aren't back to work. I've got an idea why, because they're getting unemployment. They're getting paid more to not work than they are to work. So of course they're not working. As the economy reopens, as people get back to work, there's going to be tapering by the Fed. The Fed, when these mortgage-backed securities get purchased, rates get better, and the Fed is buying them all. That's your inside tip, right? Is they're buying minimum of 40 billion a month, but I've heard that it's more like 100 billion a month. So when they stop buying, when they go, oh, the economy's starting to recover, we don't have to buy all these mortgage-backed securities, keep rates low to generate action. We can slow off of that. Okay, then what happens? Rates go up. It's simple. I mean, even for a dumb like me, It's pretty simple logic, right? And so as these numbers get better, as the economy reopens, as people get back to work, this was a disappointing number today, and that's why we saw some more green, right? Because we thought that more jobs were going to be added. We thought that unemployment was going to go down. It hasn't yet, but like I said, there's some reasons for that. So anyway, I'll dive into. You've heard mine, right? I think rates are going to go up in the next 6 to 12 months. And by up, I don't mean huge. If we're 2.7, 2.75 today on a 30-year fixed for somebody who's well qualified, maybe it's 3.25 by the end of the year, but still up, right? Let's look at, this is just some quotes from Fannie, Freddie, and Lawrence Yun, who's the chief economist of National Association of Realtors. Oh, he thinks the rates will be similar or modestly higher. I'm kind of in that camp. I mean, there's no part of me that thinks rates will be 4% by December. I just don't feel it. So I'm probably here with Freddie Mac. 30-year fix will average 3.4 in the fourth quarter of 2021, and then go up to 3.8 in the fourth quarter of 2022. Okay, I mean that sounds reasonable, right? And so this is third quarter 2021. We got Freddie Mac, Fannie Mae, Mortgage Bankers Association, National Association of Realtors. They're all in these 3.25 range. I concur. And if you see this, I mean, these guys are big players. This isn't just like your Uncle Jim and Aunt Sally guessing on mortgage rates. 3.25 to 3.5, the end of 2021. That's where I'm at as well. And I just see it, as it trended better. Okay, economy's opening back up, trend back down to here, or a little bit worse, right? Makes sense to me. I mean, this isn't exciting stuff. This isn't, some, breaking housing crash news, but I think it's important, and I think it's accurate, and I think it's reasonable that rates will be 3.25 to 3.5. I saw some interesting stuff. I don't know what this. I was just poking around on the internet. There's some folks that think it's going to stay under 3% all the way until the end of 2022. See, that's wishful thinking in my mind. And then some articles from Bankrate that rates will go up to a point where there's not going to be a ton of refinance, and there's not going to be millions and millions of people that can benefit from a refinance, but still low enough to where homes are affordable. And sub 4% is that, in my opinion. And I think if I were to bet, we're sub 4% through the end of 2022. The Fed's made it clear, and they can de-throttle and let rates run a little bit, but not so much that we're plowing into 4.5%, 5% interest rates. I think sub 4 till the end of 2022. This will be on YouTube, so if I'm wrong, people can come back and comment all they want, tell me I'm a big idiot, to shut down my computer and turn it off. All right, hope this is helpful. Thanks for watching. Appreciate you guys.